yesterday. Thanks to Meet Kevin, was able to have that fireside chat with him, but more on that later. What was a true treat was I got to see Ben Mala speak. And boy, folks, he is exactly like he appears on YouTube and the internet. He is funny. He obviously loves his colorful words. But folks, his talk at Meet Kevin's event was really eye-opening. If you don't know who Ben Mala is, go check him out. He is very big in the commercial real estate game, hotels, retail, things of that nature. He was very upfront. He said that interest rates are crushing folks who got variable rate debt 3, 5, 7, 10 years if you're lucky. He talked about interest rates in his portfolio tripling. And he went on a very long rant about banks extend and pretend is eventually going to be over. So he's thinking there's going to be tremendous opportunity in the next 6 to 18 months. He says the banks, we will have more bank failures. There are banks that are over-indexed on certain property types, and it's getting ugly out there. He talked about bond portfolios, right? Commercial-backed paper being sold for significant discounts as they don't want to foreclose. They will let somebody else do that. So again, lots of notes from Ben Mala's talk. Again, extend and pretend could be out to 18 months. And he's really, really big on writing what he called low offers. Of course, on this channel, we talk about disrespectful offers all the time. I really thought the talk with Ben Mala was very much like you and I have been talking about for a year. Again, variable rate debt, bridge debt, inexperienced operators jumping in, and there's going to be very large losses by equity, and the banks will feel some pain as well. So I thought it was a true treat to sit in the back of the room and watch Ben Mala do his thing. Was pretty cool. So why don't we jump and talk about my fireside chat with Meet Kevin? Really give you a feel for kind of the questions that were talked about. My biggest goal in that chat was really to get the audience to appreciate that I believe real estate investing is a skill, and because it is a skill, it is something everybody in that room and everybody watching here can learn. I do think that most people fail because they are not focused. You've heard me undoubtedly talk about a buy box. I think the buy box, in its simplicity, in its focus, is everything. It's everything for real estate investors to learn the skill, and then they can take that anywhere. We did talk about the magic number of 4. Again, 4 rental properties bought over 4 or 8 years can absolutely change your life. You don't need hundreds, you don't need thousands, you can do it on your own. You don't need outside investors. We absolutely talked about Ben Mala's talk on stage during the fireside chat. I was asked if I agreed with him, which of course you know I did. I made a really big point in my talk that we repeated exactly what we did last time in a new asset class. Why was the GFC, the Great Financial Crisis, so bad? It's because we had short-term debt, variable rate debt, bad operators, people chasing money, and the system broke. We did exactly the same thing, except this time in commercial. The difference this time is the banks took the losses. Now, equity is going to take the losses. So there's going to be a lot more individuals see significant losses in their portfolios. Banks, again, are better off. We talked about that because, again, equity will take the largest haircut, probably go to 0 in many cases, unfortunately. I talked about you got to get in the right rooms, right? One of the mistakes that I have made, and I shared with that room and I've shared with you, is the first 5 years, I tried to do everything ourselves, right? I tried to be that lone wolf, that person that was doing everything by themselves. And that's just not, it's not how it's done. You got to network, you got to get in right rooms, you got to have friends, you got to have a community of like-minded individuals. Thankfully, this is something I'm very big on. Have this growing school community, which is over 160 folks already and growing. Speaking of school, you have 3 events this week. If you are in school on Wednesday, you're going to get the chance to interact with April Crosley. On Thursday, Hemlane is doing a presentation on finding good tenants. And then Saturday, the one and only Bo Eckstein is doing a business ownership summit. Again, you don't have to attend, but if you'd like to, is there as opportunity. The videos will be recorded just in case you missed them. Again, Dion's talk is up from last week. I still need to get with Matt to get his, but hopefully we'll get that done today. 2 more points about the fireside track. Wealth comes from holding. I tried to make a big deal about, if you just buy and you hold for 10 years, you hold for 15 years, your chances of getting wealthy are pretty good. And then finally, I was really blessed. The folks in that room, a lot of them didn't know one rental at a time, but we probably took 40 pictures, maybe 45 pictures after the talk. So again, if you were there, tag me on Instagram. Always appreciate the fans and answering any questions I can. So Kevin, thank you for the opportunity. Ben Mala, you're a rock star. It was really fun to hear you talk. KB Homes. KB Homes reported earnings last week. I read the transcript, or at least the CEO's transcript, and really interesting. KB Homes, if you don't know, in my opinion, is kind of the entry-level home, right? If anybody's going to go create more and more first-time homebuyer homes, I think it will be KB Homes. They experienced higher traffic levels, cancellation rates well below average. They've increased their investments in land. I thought that was interesting. Again, buying more land. Land obviously becomes lots. Lots become homes. And of course, they raised their dividend after beating earnings and revenue. So again, looks like new home builders certainly at the lower end are doing well. Maybe the higher end, like Toll Brothers, not doing as well. But yep, entry-level homes doing quite well. Grant Cardone is at it again. He says that we have to lower mortgage rates to 4%. It is Grant Cardone's opinion that if we go to 4%, inventory will explode and prices will fall. Folks, first interest rates were going to go up, was going to crash housing. Now interest rates going down are going to crash housing. I don't get it. I will admit that rates at 4% would unlock a lot of supply. Absolutely. How many people are in their homes that would like to move, but they can't at 7%? Most of them can at 4%. So agreed. But here's the wrinkle. All of that supply, they also become buyers, right? Again, most people in the move-up market, which would be the unlocked market, are also demand. They're supply and demand. So we unlock, in my opinion, even more demand than we do supply. But it's an interesting thing to think about. I think any mortgage rate below 5% could unlock meaningful supply. It doesn't have to get all the way to 4, but 4 would certainly do it. Let's talk about, here's a housing stat for you thanks to Resi Club. Gotta love Lance Lambert. 32, so what is that, like 15%? 32 of the 200 largest housing markets are back to pre-pandemic levels. Folks, a year ago, 0. Now, a year later, 32 of the top 200 markets are back to 2019 levels. Pretty cool. Yes, 16%. Thank you for that. 16%. So, that's what we do here, right? Track your buy box, understand the numbers, see what's going on. If you are in one of these 32 markets, if your buy box has more listings now than it's ever had, good news. Good news. Track, look at days on market, start writing disrespectful offers. Remember, folks, we are only doing great deals. Not average, not good. This is our time. It's our time to find the motivated sellers. So make sure you are doing the work and you don't stop. Saw an interesting thing from Lance over the weekend talking about the housing shortage. Have you heard about this? Apparently, according to Zillow, we are short 4.5 million housing units. On the opposite side, the lowest estimate was by Zonda. Zonda says we are 1 million short. So the experts are saying we are between 1 and 4.5 million single-family homes short. It's interesting to think about because I actually think it's worse than that. Because when you talk housing, it's too broad. I believe the thing that we are missing is entry-level housing. I think we have over-rotated the last decade to McMansions and big homes and all of that because it's profit. Where's the profit? You got to make them big so you get those rich people to buy. What we need to figure out is a way to build entry-level housing. Build a 950 square foot, 3 1.5. Build 2 bedrooms, and that's what we're short. We're short in millions of units. If we could unlock, the 1,000 square foot home and make it profitable for builders, there's so much demand there. So much demand. It's just tough to do that. So I thought that was an interesting thing. 2 more things to talk about. How about being in the top 5% for your age bracket? This is, I didn't write it down. I don't have the source, but it's an article I read this morning. The top 5% by age bracket. This is a net worth statistic. If you are in your 20s and your net worth is north of 415 grand, congratulations, you are in the top 5%. How about you 30-year-olds? 30-year-olds, you need to have a net worth above 1.1 million. 40-year-olds, 2.5. 50-year-olds, my group, 5 million. 60-year-olds, 6.6. And if you are over 70, the answer is 5.8 million. So here's the deal. How do these people get in the top 5%? They own assets. This is not rocket science. You've got to own assets and own assets for a long time. And then shout out Morning Brew. I got this very interesting stat from Morning Brew. I'm going to give you 3 numbers. 3 numbers. I want you to tell me what is the most surprising. Okay, what is the most surprising? According to Morning Brew, there are 50 million people making money on social media as influencers. That's the first number, 50 million. The second number, 48%, roughly half, 48% make less than 15 grand. The third and final number, again, trying to figure out what is the most shocking to you, 13%. 13% make more than 100K. So what is most surprising? 1, there are 15 million people making money as an influencer. 48%, roughly half, make less than 15 grand. Or there are actually 13%. So what is that? That's like, what is that? 6.5 million? 6.5 million make more than 100 grand. 6.5 million people make more than 100 grand because of social media. So folks, let me know what was the most surprising statistic. And finally, we're going to send out some golden tickets today. Yes, while I was traveling, we got some folks that earned their golden ticket. I didn't have any with me in New York. Shame on me. So we're going to give them a congratulations today. Kevin, congratulations for getting your golden ticket. And then Harish and Iswari, congratulations for getting your golden ticket. Both of your cards will be in the mail today. Headed out to you. Congratulations, folks. Like, subscribe, comment. Don't forget to join school. We've got 3 activities this week. More planned next week. Henry Washington. We're trying to get Lance Lambert, Coach Carson, all the people on the channel so you can interact, ask questions. Only in school. Those videos won't be making it on YouTube. All right, folks. Take care of yourself. Have a wonderful day. Later.